Chip stocks are absolutely on fire right now, and I'm talking double-digit moves in a single day. KLAC just jumped over 8%, AMD's crushing it, and the whole semiconductor sector is telling us something important about where money is flowing in 2026. Stick around to find out what it means for your portfolio. Let's start with the indices. All right, so the Nasdaq had a really solid day today, up 1.52%, closing at 26,213. That's a meaningful move, and here's the thing, it's part of a bigger trend. Week to date, we're up 2.45%. So that's 2 weeks of momentum building here. The semiconductor space is absolutely leading the charge right now. You've got foundry equipment makers, chip makers themselves, they're all catching bids. This is that classic risk-on sentiment where investors are chasing growth, chasing AI exposure, and the broad tech index is the place where that money goes. The Nasdaq's telling us people feel pretty good. The Dow Jones, now that's a different story today, right? Up only 0.26% at 52,319. Weekly, we're up 1.26%. So the Dow is lagging pretty significantly behind the Nasdaq. That's actually a really important divergence to notice. The Dow is more defensive, more industrial, more old-school value. The Nasdaq's the growth machine. When a Nasdaq is crushingly outperforming the Dow like this, it tells you that traders are not worried about the economy slowing down. They're not rotating into safe havens. They're doubling down on growth. That's a risk-on signal, and honestly, it's pretty bullish for the overall market. Now here are the top movers of the day. Okay, now let's talk about the movers. KLAC, that's KLA Corporation, the foundry equipment maker, absolutely exploded today, up 8.38% to 301.71 a share. And this is nuts. Week to date, up 23.4%. More than 20% in 1 week. Why? Advanced chip manufacturing is booming. Foundries are ramping capacity like crazy to keep up with AI demand. KLAC sells the tools that make those chips. When you've got TSMC, Samsung, Intel all racing to expand, equipment makers like this are the picks and shovels play. And clearly the market is rewarding that story big time right now. Air Products and Chemicals, APD, also had a monster day, up 8.04% to 293.18. Weekly, up 3.8%. APD makes industrial gases and chemicals. Why is it spiking? Same story, actually. Semiconductor manufacturing is incredibly capital-intensive and chemical-intensive. You need specialty gases for chip fab processes. When chip makers are spending billions on new fabs, chemical suppliers like Air Products are getting that volume. Plus, APD's got strong earnings visibility right now. The foundry expansion cycle is real, and APD is right in the middle. AMD, Advanced Micro Devices, up 7.68% to 580.91. Week to date, up 11.75%. AMD makes processors and GPUs. The GPU story is absolutely massive right now. Data centers are buying their gear like crazy for AI training and inference. AMD's got strong competitive positioning against NVIDIA in some segments, and investors are clearly feeling good about their market share and profitability. Plus, we're getting closer earnings season. People are betting AMD's going to beat. That 7.68% move today is telling you the market thinks this chip story has more legs. Lam Research, LRCX, up 5.46% to 433.33. Week to date, up 16.7%. Lam is another foundry equipment maker. Same thesis as KLAC. You've got this race to build more fab capacity, and equipment makers are the biggest beneficiaries. Maybe not as explosive as KLAC today, but still a really solid move. And the weekly performance, that's 16.7%, shows this isn't just a one-day story. It's a sustained rotation into the semiconductor equipment space. Institutional money is recognizing that AI demand means years of fab, and then there's AT&T, the telecom, down 5.13% to 20.70, and week to date down 9.25%. Yeah, that hurt. What's going on? Well, telecom is a defensive sector. When growth stocks are ripping like they are today, defensive names get sold. Investors rotate out of stable dividend payers and into more exciting, higher beta stuff. Also, there's probably some concern about margin pressure in telecom, competitive intensity. So AT&T's weakness is basically the flip side of that risk-on environment. When semis are flying, telecoms struggle. That's the trade we're seeing play out right now. Now, let us look at energy and fuel. Oil slipped a bit today. West Texas Intermediate down 1.02%, sitting at $70.03 a barrel. But here's where it gets interesting. We're down 4.34% over the week. So that's a real pullback. What's driving it? Supply is stable. OPEC is being disciplined, but demand signals are getting a little softer. You're also seeing some of that geopolitical risk premium fade as tensions ease. And honestly, with the Fed potentially staying higher for longer, that's keeping a cap on growth expectations and energy demand. Oil's telling us people aren't super confident about aggressive economic expansion right now. Natural gas actually had a nice day, up 2.52% to 3.26, and week to date, we're up 3.49%. So that's one of the brighter spots in the commodity complex. What's going on? Summer cooling demand is ramping up. Air conditioning season is here, and people are running their systems harder. You're also seeing some storage data that's tightening up the supply side. So unlike oil, which is getting softer, natural gas is actually catching some bids right now. It's a good reminder that different commodities have different drivers, and nat gas is benefiting from seasonal demand tailwinds. Moving on to metals. Gold barely moved today, down just 0.01% at 4,021.80. So basically flat. But week to date, we're down 2.62%. And here's what that tells us. Gold is doing what gold does when people get less nervous. Investors are feeling risk on. They're chasing equities. They're chasing semiconductors. When that happens, safe haven demand for gold softens. The dollar's been stable. Inflation expectations aren't spiking. So there's no real fear driving people into the yellow metal. That pullback over the week is actually consistent with a market that feels pretty confident right now. Silver's a little more interesting, up 1.5% today at 59.04. But here's the thing, weekly, we're down 4.8%. So silver diverged from gold today. That tells me there's some industrial demand coming back into silver, people using it for manufacturing, solar panels, electronics. When the economy feels stable enough that industrial usage picks up, silver can outperform gold. So that small daily pop might be signaling some confidence in manufacturing activity. Week-to-date pullback. That's just following the commodity complex lower, but the day's strength is worth watching. And finally, let us look at tomorrow. All right, so here's what to watch tomorrow. We've got a huge economic calendar. ADP employment is coming at 8:15. That's the private payroll number. Forecast is for 118K jobs, down from 122K last month. Then we hit the big one, ISM manufacturing PMI at 10 a.m. People are watching this closely because manufacturing's been a question mark. If it disappoints, you could see some risk-off rotation. We've also got ISM prices data, crude oil inventories, and a speech from Fed Governor Warsh. All of that could move markets. The thing is, right now, the tape is telling us people feel good. Semis are ripping, growth is flowing. Tomorrow's data needs to be really ugly to shake this momentum. So keep an eye on that ADP number and the ISM data. Those are your real market movers tomorrow. But honestly, with this kind of strength in the chip space, a minor disappointment probably doesn't derail the trend. Stay sharp, stay curious, and we'll see you tomorrow with the numbers. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.